Wow, what a bloodbath today. Definitely not a bear trap. Boy, back to work tonight, guys. And we talk about this a lot in these videos. Being a successful trader is not about making predictions. It's not about being right every time. It's about rolling with the punches and making money no matter what the markets throw at you. So if you adjusted today, well done on that. Let's get back to work tonight because we have a lot to cover in a very important video tonight. We've got some huge news coming out tomorrow. And I'll tell you, the 60-minute charts combined with our tick charts, we've got some great trades to look forward to for Thursday. So I'm going to cover all my favorite trades in the video tonight. We saw some really big moves down today. And anytime we see big moves like this, there are two specific scenarios I want to make sure that I'm ready for, and I want to make sure that you have a game plan to make some money with here tomorrow. So we're going to cover all the details in the video tonight. Before we jump in, though, and talk about my favorite trades for tomorrow, make sure you subscribe to our channel that we don't miss tomorrow night's video. And if you enjoyed these videos tonight, as always, I appreciate you guys tuning in and watching tonight. If you like this stuff, hit that like button for me. Give me a shout out down in the comment section below. Thank you so much for supporting the channel, sticking around tonight. But let's get this video going. Thursday could be very thirsty Thursday, a wacky Thursday for us here tomorrow. Now, I like to begin my analysis on the 60-minute chart, both here on the S&P and the SPY and the Nasdaq and the QQQs. The 60-minute chart makes it easier to plan my trades for tomorrow. And then later on in the video tonight, I'm going to drill down to some faster tick time frames, tick charts. Tick charts make it easier to find the entry patterns. So we'll do a broad game plan in the 60-minute, and we'll drill down to our faster tick charts and give you guys a roadmap to make some money with the specific entry patterns here for tomorrow. Both of these markets made some very, very big moves down. And like I mentioned a few moments ago, anytime we see big moves like this, there are two specific scenarios I'm going to be looking for here tomorrow, and we'll cover those as we go deeper into the lesson here tonight. One pretty interesting takeaway about both of these 60-minute charts: we're very bearish, as you can see here, in the short term today, but you'll see tonight as we go deeper into these charts here, we're in very significant areas of support with ranges up above us. So I'll tell you right now, we're very bearish, but it's difficult to want to short in this area at this point. So I would imagine if we play our cards right tomorrow, ahead of that big news tomorrow afternoon, I would imagine there's potential to make money on both the long side and the short side in tomorrow's session. And I'm going to go over all the details here in just a moment. Now, before we dive into our tick charts and talk about the entry tactics on those two scenarios I mentioned before, let's double check real quickly. Let's take a look at the schedule for tomorrow. There are two things that you want to keep on your radar for tomorrow. No, it's not that jobless claims report. That's probably not going to be the market catalyst for tomorrow. I would definitely keep your eyes on, or at least I'll be keeping my eyes on the ISM Services Index. We saw how much the market reacted to the ADP employment number at 8:15 this morning. The Fed has told us repeatedly their biggest concern right now is the services, the wage growth here in the U.S. So we know the Fed's watching that. We assume most traders are watching that as well. That is the first thing on my radar for tomorrow. And obviously, I think everybody knows this already. Tomorrow, of course, is kind of the climax of earnings season. Earnings season lasts for 3 weeks. Tomorrow afternoon, we have, you could argue, the biggest earnings reports of the entire 3-week earnings season. It's not going to come until after the close tomorrow afternoon. And I'll tell you, when I think about that, with the big moves down that we saw today, I wouldn't be surprised if markets go into some trading ranges. That might be one of the scenarios to game plan for tomorrow, which is great news for someone like me, right? If you know my style, I love range-bound markets, right? So potentially some ranges building up before we get potentially some big volatility. Tomorrow night, I would imagine tomorrow night will be a very important video newsletter as we react to those big earnings reports tomorrow evening and then get ready for the big non-farm payroll number coming out on Friday. We have quite the big 1-2 punch coming in tomorrow afternoon. So just keep it in mind, 10 o'clock is the ISM services number. And then, of course, later on after the close is, of course, the big earnings, and we'll kind of get ready for non-farm payrolls on Friday. Now, back to our charts here right now. The money is made, of course, on the charts. It's good to know when the news is, but the news is noise. It's very difficult to trade off the news. Let's go back to our charts and find the best trades here for tomorrow. I'm going to start first here on the Emini and the SPY, and we'll finish up tonight on the Nasdaq and the QQQs. Now, like I mentioned in the introduction, we're very bearish overall right now, but it doesn't take a very experienced chartist to look at this chart and say, this looks a lot like, you guys know this, a spike and channel pattern. Now, if you're a student of mine, inside my video classes, we talk about spike and channels, and we talk about how spike and channels love to pull back to the base of that channel and then ultimately end up right back where they came from. Now, again, we're very bearish right now in the short term. I would imagine anytime we see a strong move down like this, bears are going to be trying to short the next pullback. But at the same time, though, this seems to be a great place for buyers to be taking some nibbles on the way back up again. I don't think anybody would be surprised if we finish up the week this week right back up into that trading range. So very bearish. There are probably going to be some short setups on our radar for tomorrow. But again, great spot here for buyers to start chipping away at this and get back up into that range. Let's now drill down, knowing that. Let's drill down here now to the faster time frame, to the tick charts. Now remember, tick charts make the entry patterns easier. This is a 7,000 tick chart. You can see all the time frames in the upper left-hand corner. And if you're watching for the first time, that is the 21 EMA. I talk a lot about how to use the 21 EMA to find lots of winning trades in our free trading classes, right? Most of you guys are learning about how to use the 21 EMA. What's the most important factor that we have right now on the E-mini? Well, it's a big move down, right? It's a big move down. Anytime I see a really big move like this in one direction, the two scenarios I have to be ready for tomorrow is, one is a two-legged correction. Remember, anytime we see a strong move in one direction, strong move down, we expect to pull back and a retest of that low. And then from there, do we get that double bottom reversal we talk about so much on these videos, or do they keep on rolling like they did today? So the first thing we'll talk about tonight is how to trade this two-legged correction, because there's probably money to make on the bounce going up. There's probably money to make on the short back down again, and then hopefully we can get that bounce right off of that low. All right, that's the first of two scenarios we'll talk about later on in the video tonight. On the Nasdaq, we'll talk about trading ranges, because range-bound markets, especially ahead of the big earnings tomorrow afternoon, that is the second type of situation. Remember, ranges are my favorite types of markets to trade because it's easy to structure and find winning trades. So we're going to talk about that a bit later on here in the video. Let's talk about the two-legged correction, okay? Anytime we see big moves, we know that sellers are going to want to sell high, right? They're not going to want to sell low. When it comes to finding two-legged corrections, what you want to think about is a measured move that goes a little bit further, all right? So in my free trading classes right now, you guys are learning about measured moves, right? So basic symmetry, one leg and two leg. So imagine a measured move. Usually two-legged corrections go a little bit over that measured move. Now, obviously right now, I don't have enough information to give us the exact levels right now, but once we start getting that two-legged correction here, we'll start looking at where that area is going to be and look for, well, I think we can find some long trades on the way higher and then try to trap some buyers in and run this thing right back down again. As we're going higher, there are really two types of entry patterns we're going to look for. Both of them are going to be bear traps. One is going to be a large bear trap. Now, in my trade room, I'm always talking about when you're trying to reverse a big, strong move like this, the stronger the move that you're trying to reverse, the more obvious, the bigger the bear trap needs to be, okay? Now, in my free trading classes, you guys are learning about bear traps, right? Very specific. It's a higher high in price, right? And that trap will be below that low, right? So think about, again, very large move down. to be a buyer against that much momentum right now, remember, very bearish environment right now, we need to really rope these bears in and get a very obvious bear trap. Again, the bigger the move you're trying to reverse, the bigger, more obvious, right, that bear trap needs to be. So higher high in price, nice strong signal coming off of that bear trap. We may not get that. We may not get that variation of it. We may only get this market to start to sprint as it goes higher. These are a little more tricky. On these ones now, as we're going higher, these types of bear traps are going to be right below prior swings like that. Okay, so these are the two types of trades I'm looking for here as we start to get that two-legged correction, right? Expecting that two-legged pullback. In my trade room, I call these 1, 2, 3 moves. So if you're a student of mine in the trade room, right, we call these 1, 2, 3 moves. Now, that's the game plan as we go higher. Now, once we start getting up around that two-legged correction, we start getting up around resistance, right? And again, difficult to predict exactly how far that will be. But once we start getting up around this area now we begin to anticipate buyers coming in, and this will start to feel like a reversal. Right? At this point, not a reversal yet. It won't be a reversal until they jump and really rip off that moving average, right? Remember, strong move down, we're anticipating a pullback and a retest of that low. So hopefully we can use one of my failure patterns and trap these buyers in. So now as we go higher, now buyers start thinking, maybe this is a reversal. It's probably not a reversal just yet because of all of that bear momentum. If I can get these buyers to come in and start buying that pullback, I could then use their stops as fuel, right? Think about where their stops are, and I can use, just like I teach it in the free trading classes, I can use my stops or my failure pattern to sell into stops, and then hopefully we can grab that pullback combination on the way back down to retest that low, right? So again, as we pop up, we try to trap in these buyers above the moving average, sell into their stops, and then use that failure into pullback combination that we talk about in the free trading course on the way back down. All right. Now, obviously, I'm just simply drawing the screen here right now, but don't forget, I teach these patterns in our free video classes on the website. If you haven't learned traps, failures, pullback combos, this sequence here, what I'll do is I'll put a link up there for you in the upper right-hand corner. Grab that link, take that free trading class, because the strategy you'll learn in that short video series will teach you a simple trick that we use every morning in our trade room to know exactly where the best winning trades are going to be each day. And I'll teach you my 4 favorite entry patterns, things like bear traps, things like failure patterns, pullback combinations. That way you'll have the information you need to start making money consistently. If you're taking too many losses, if you're not getting the results you want right now, hit that pop-up in the right-hand corner, take that free class. I'll put all of the links, by the way, down in the description of the video. So for some reason you can't grab that pop-up there, and I've got probably hundreds of examples of things like bear traps, right, on the way higher, things like buyer failures off the moving average, failure into pullback combinations, and then running back down to retest that low. Now remember, later on in the video, I'm going to talk about if we start going sideways here, because again, that is a very realistic possibility. Now, I do want to talk about a buy the low, right? Because that could be a very lucrative, that could be one of the best trades of the week to buy off of that low. Before we do that though, what would it take for this to become a reversal? Right? How would this market reverse? So we're looking for a two-legged correction, right? We're looking for a two-legged correction. And again, it'll be a little bit more than a measured move, like I mentioned earlier. So let's say, for example, we do get that pop-up. We don't get the buyers to fail though, right? Now the buyers come in and they don't try twice and fail back down. No, they hold that pullback now, right? And they what? And they jump off of that moving average. Now once that happens, this becomes what we call a 1, 2, 3 reversal pattern. The buyers are jumping off the moving average. That gives the buyers control now. And these are pretty easy from here. We simply draw a trend line off these highs. We bring it down off those big lows, and we start looking for pullbacks or traps or failure patterns. Any of the entry patterns you guys are learning in that free trading course, we're looking for the first test off the low of that channel. It could be a trap like I'm drawing right here, right? It could get underneath the moving average. Bears sort of short this thing. We now look for failure into pullback. You guys are learning all this stuff, right, in that short video series. Okay, so that's one way to know when a pullback turns into a reversal. It pops up and it jumps off the moving average. Another way to know when a market turns into a reversal is it will pop up and begin to flutter and flutter and flutter, right? We call these the pop and grind, right? That grind, right? That pop up and that grind going higher, what that will tell us is the bears have now walked away. It's basically a short squeeze. Now, these can be a bit tricky because as it's grinding higher, that little voice in your head will say, shoot, I'm missing it. Get me in, get me in. It'll be very difficult to resist the temptation to chase it. But the key is draw that trend line off those highs, pin it down to those big lows, and go looking left and find those prior swings. And again, this could be any of the entry patterns. My favorite entry pattern on this one, though, right, is always that bear trap. But any of the entry patterns you guys learn, traps, failures, pullbacks, right off the low of that channel. Now, one thing to keep in mind on these types of reversals is the first leg and the third leg are usually pretty symmetrical. Right, the middle second leg there, the grind, right, the grinder. That's not the focus. The focus is once we know how big that first pop up is, okay, then we take that size, we pin it that low, and that creates, right, that measured move, if you will, right, that creates that symmetry, and that usually is where, right, the buyers are going to try to go. Again, doesn't seem as likely for tomorrow, but hey, we want to make sure we're game planning on that just in case we need to. Now, last thing, and then we'll jump to the Nasdaq. And we'll talk about ranges because ranges, of course, are one of the easier ways to make money for tomorrow. Now, let's say we get that bear trap right on the way higher. We get the buyers trapped in, right? We'll roll back down to retest the low. What's my problem down here? I want to be a buyer down here. What's the problem, though? The problem is momentum. It's a great location, right? Great location, lots of support on the 60-minute, but a lot of what? A lot of bearish momentum here at these lows. And so once I retest those lows, I can't just go try picking a bottom. Right? If we learned one thing today, we don't want to get in the habit of picking bottoms, right? Once we roll over and retest the low. Now, if I see bears coming in and trying once, trying twice, trying to keep this thing going, right? If they try and fail, right? If we now over here, right? If the bears are successful and push through, okay, right? But if the bears come in and try to short this thing now we know exactly where their pain is. Now we know exactly where their stops are. And we're going to need those stops. We're going to need that to fuel this move where? Probably back up to retest that high right there. Okay, again, I'm going to use my failure pattern, pretty much the exact same game plan we have up here, right? Pop it up, get those buyers to try a couple times, use their stops as fuel to roll this thing back down, take out that low, right? Professionals are selling high tomorrow. Professionals are selling at resistance overhead tomorrow, we assume at least, right? But down here, right? Down here, these are rookies. Right? These are not professionals down here, right? These are rookies, right? Trying to short this thing, going lower. So as we go lower here, we trap those bears in, and we're using that failure pattern, potentially a failure into pullback combination, failure into pullback combo on the way back up to take out that high. All right, guys? So this is the dance that, again, whenever we see these big moves down like this, we expect what? A two-legged correction, a bit more than a measured move, right? A little more than 100% off of that low, right? Looking for bear traps on the way during that. And then, of course, once we get up around areas of resistance, we look to trap those buyers in who are thinking this is a full-blown reversal. It's not a reversal till what? Until they jump off that moving average, momentum shifts if they can, and then once we get back down to retest the low, right, do we keep going? If we keep going, that'll be something that we'll have to worry about tomorrow morning. We'll cover that tomorrow in our trade room. But the odds are pretty good, though. After a big move down like this today, it's very difficult, unless something changes here overnight or we see some more big news that spooks the market tomorrow, very difficult to get the market making big moves 2 days in a row. It's more likely now the rookies get trapped in and we squeeze them out back up to retest some of these highs. And that may ultimately be when that range starts to develop here tomorrow into that earnings number tomorrow afternoon. All right, guys? So that's the game plan. That's where my mind is at for tomorrow. And now all we need is a bit of time here right now and see what we get here into the Asian session. Let's go over to the NASDAQ now. The NASDAQ is definitely a lot more bearish than the S&P. You'll definitely see right away here on the 60-minute. However, there's one very interesting part about this NASDAQ. If you've been watching my videos the past few weeks here, really, we had that big run up, right? Middle of the month of July. And I kept on saying over and over again, they're probably going to pull back to this area, right? It's kind of a breakout pullback, right? Breakout, pullback. We talk a lot about breakout pullbacks. And so I was always kind of impressed that they never actually made it back, right, to that breakout pullback area. This may be their attempt to kind of check that off the list, right? To kind of take out those highs here. It was always kind of surprising that it was always kind of surprising that we went all the way up, made that big collapse down, right? But never took out that area. Well, now we have, right? Now we have. So check that off the list here. Now, very bearish, right? There's no doubt about that. That was a hell of a move down here today. But quite a bit of support, right? Quite a bit of support with quite a few ranges here above me. Very difficult to want to short right here, right? All right, now, we talked about the basic game plan. Let's drill down now to our tick charts here on the NASDAQ. This is a 5,000 tick chart on the NQ or the QQQs, whichever is your fancy. The same basic idea here as we mentioned there on the S&P, right? So looking for that two-legged correction, a little bit more than a measured move, get up into areas of resistance, trap those buyers in, look for that move back down, trap the sellers in, right? Look for that move back up and start fleshing out this area, right, as that big trading range. Now, talking about trading ranges, let's think about range-bound markets. So ranges, as I've said repeatedly this week, are my favorite types of markets to trade because once you find the range, you pretty much know that range will act like a magnet. So let's kind of game plan this here because that is something that is very realistically possible for tomorrow because of that big earnings tomorrow afternoon. When you think about ranges, okay, ranges are balanced markets and they're going to want to rotate. They'll rotate up, they'll rotate down, right? They'll rotate up, back into the range, they'll rotate down, back into the range, and they're going to rotate back and forth like this, okay? Ranges are magnets, and what will happen is we'll find levels of support below, levels of resistance up above, and there are two basic entry patterns. We talk about these in our free trading classes, and they are failures and traps, okay? Now, anytime I see a trading range, I want to focus on the edges. Failures around the edges. Okay, so as we go higher, buyer failures. As we go lower, seller failures. As we go higher, buyer failures, right? Go lower, seller failures off the low. Again, I call them failure patterns, trapping traders on the wrong side of the moving average. I'm going to go into more detail about this stuff here in a moment, so don't worry if I'm losing you here. Now, during the rotation, okay, during that rotation, as the market is rotating down and then as the market rotates back up, the next pattern is a trap. Okay, so as we rotate down, we look for bull traps. As we rotate back up, we look for bear traps. We rotate back down, bull traps, and vice versa. Okay? Now, when it comes to ranges, the amount above the range, the amount below the range, we look for things like expanding triangles around the edges, okay? You guys are learning this in that video series. But that's the general idea behind a trading range. So we're pretty bearish here overall, right, on the short term. So as we go higher here, right, if we end up going higher here, right, as we go higher, if we go higher here, the goal, of course, is to trap some buyers using a failure pattern. So we're not trying to pick the top on this, right? I'm not going to blindly sell into this. Again, if there's one thing we learned today, we don't want to get in the habit of picking tops and bottoms. We don't just blindly sell at resistance or buy at support. What I would rather do is to make it easier to make money consistently, I'll wait for the buyers to come in. And like I mentioned on the Emini chart earlier, as buyers come in and try to buy this thing going higher, trap them in and use their stops as fuel for that run back down into that range, right? As they pop above that moving average, trap those buyers in and sell into those stops, right? Going back into that range again, okay? Now, as we get that move going lower, this is where traps come in, okay? We don't want to sell too low. This is where traps come in. Now, look at how these patterns set up, right? So as we go higher, we run into resistance. The buyers try once, the buyers try twice. We then look to sell right into those stop losses. We're going to need those stops to fuel this move, right, and turn it back around. That we're not picking tops. Now, as it rotates back down again, remember, markets like to rotate in ranges. As it begins to rotate back down again, now we look to sell as high as we can. Watch this pattern set up. It's a lower low in price and a trap above that high. All right. I know these are tricky to learn at first, but think of it this way. Strong move down, shallow pullback, lower low in price. That's the key. Lower low in price. And then that trap above that high, it'll be a nice strong red candle closing below the 21 moving average. Okay. So a failure pattern above the high, a trap as we go lower. Now, usually what happens is the amount we go above the range is about equal to the amount we go below the range. So that becomes a key area of support down here. We finish off that rotation. Okay, now in come the bears now, right? Range above us is a magnet. We're at tons of support down here now, right? Below the range. And now what do? Do we pick a bottom? Do we blindly buy the bottom? That's not my style. You can if you want to, right? But again, we learned a lesson today. Don't pick tops or bottoms. Trap those bears in. Let those bears try a couple times. And then think about where their stops are. And we can buy into those stop losses. And then where do we think the market wants to go at that point, right? It's going to want to rotate back up, right? They want to rotate back and forth. Now, as it's going higher, do we chase after it and buy into it? No, we don't. We're going to buy as low as we can because that will allow us to risk small, to earn large. It will allow us to buy nice and low so we're not getting shaken out on any small pullback here. As we go higher, shallow pullback, higher high in price, and then what? A trap right below that prior swing. Okay, so as we go higher there, again, trap those bears in to try failure off of that low, off of support, below that trading range. And obviously tomorrow morning, we'll flesh this out together tomorrow. We'll know more about that tomorrow, right, once we see more information. But again, the idea is pretty simple. That failure pattern, use stops as fuel to run back up into that trading range. And then as we're going higher, as we're rotating, right, there's that. This would be a bear trap, right, for a bullish move, right, going higher. As we go back up, right, 1, 2, back down again, etc., etc. Now, one of these may break out. Right? One of these, the buyers may come in, they may hold the pullback and jump. If they do, that's a reversal. All right? The bears may come in, the bears may come down, they may hold that pullback and jump. Right? If they jump off that moving average, it's just like those SpaceX rocket ships, right? With those jet propulsions, right? Have to get themselves out of the Earth's gravitational pull, right? The atmosphere, right? That range, right? That range is like a magnet, right? To drag it back in. So as we go higher, we don't trust the breakout. We have to wait for it to jump, right? And really force itself outside of that trading range, especially down at that low. So one of these will probably end up being a breakout, right? And again, a breakout looks like if they pull back and they jump right off that moving average. We're always talking about this in our trade room. Never trust that first leg, right? Never trust that first leg. Never trust that first leg, okay? Make them prove it to you. They can hold that pullback and rip this thing out of that range's magnetic kind of pull, all right? So failures, traps, trade the rotation. Don't trust those breakout legs. Make them prove it to you. And if they do, right, and again, if they do pull back, hold that pullback and go. Right? You know the game plan now. We talked about that a few moments ago on the S&P. All right, guys? So a pretty simple game plan for tomorrow. The only variable we have right now is how much will we get tomorrow ahead of that big earnings report tomorrow afternoon. I would definitely have your eyes on some ranges. We'll be certainly keeping an eye out for ranges tomorrow morning in our trade room just because we have that big news coming out tomorrow after the close. All right, guys? So the game plan is set. Like always, remember, it's not about being right every night or every day. It's about making money on no matter what the market throws at us. I'm sure there'll be some curveballs tomorrow, but that's all right. We're up to the challenge. Tomorrow morning, we'll be trading together tomorrow in our trade room, 8 o'clock Eastern time. If you're looking for a great place to learn this stuff with us and trade along with us, if you're missing out on too many of the good trades right now, you'll love our morning trade room. I'll put all the membership links, all the free course links. I would definitely recommend take that free trading class, learn all the entries free setups. That way you kind of get yourself moving in the right direction, making money on your own out there, and you'll be ready to go for trading with us sometime soon in the morning trade room. If you have questions, if you need help getting access to any of the video classes, please don't be afraid to call or email or use live chat. I'm always here to help out. So if you need help, definitely reach out and don't be a stranger. All right, guys? Thank you so much for tuning in and watching tonight. Thank you for sticking around all the way to the end. Now get out of here, get some rest, get a good night's sleep, get a busy day coming tomorrow. Hopefully I'll see you tomorrow, 8 o'clock Eastern time in our members trade room. If not, we'll come back tomorrow night. Get ready for the reaction to the big Amazon and Apple earnings and get ready for non-farm Friday. It's been a great week so far. Let's keep it going here for tomorrow. In the meantime, be well, be nice to each other out there tomorrow, and be here next time. Adios, amigos. Bye-bye for now.